Welcome to the Contrarian Investor Podcast. We give voice to those who challenge a prevailing sentiment in global financial markets. This podcast is for informational purposes only. Nothing on this podcast should be taken as investment advice. Guests were not compensated for their appearance, nor do they supply payment in order to appear. Individuals on this podcast may hold positions in the securities that are discussed. Listeners are urged to educate themselves and make their own decisions. This podcast episode may have ads and the occasional announcement. To listen without ads or announcements and take advantage of a host of other benefits, consider becoming a premium subscriber. Visit the website contrarian.supercast.tech. That's TECH for more information. Now, here's your host, Mr. Nathaniel E. Baker.
Marc Chandler of Bannockburn Global Forex. Thank you for rejoining the Contrarian Investor Podcast today.
It's always a pleasure to see you. Thank you.
Likewise. Thanks so much for coming on. It is Monday, October 28th, a week and a day before the U.S. presidential election. But we're going to talk about that from an economic and market standpoint. We don't want to get into political discussions here, other than how the election is going to impact markets. And so curious what your views are there. As we, like I said, as we record this, Trump is apparently ahead in the polls, ahead much more in the prediction markets, to the extent that you put any faith in those. But yeah, what are your views?
Yeah, I think you're right. The closeness of the election, and when it comes to the markets, capital markets, we think of risk as a function of volatility. The more volatile something is, the riskier it is. But when it comes to politics, it's some combination of credibility and capability. Capability, how big of a threat is it? How potent is it? And then what's the probability of it materializing? And I think that the markets come around, they recognize that the election is very close, but the impact of a Trump victory is seen to be greater than a Harris victory. And so the market has had to prepare for that, has had to position themselves. And what that means in a concrete fashion is higher interest rates. I think many people, large pools of capital like Fink at BlackRock, but others as well, have said that maybe the election, regardless of the outcome of the election, that the U.S. is going to be looking at larger deficit, which means more supply of treasuries, which may mean higher interest rates, which the market understands, especially in the current context, higher interest rates to be better for the dollar. And so we have seen the dollar rally, we've seen U.S. interest rates rise as the market prepares for the election, in which, like I say, it's very close. But because a Trump victory is seen to have greater impact, that's what the market's got to be pricing in. And it's not just that a Trump victory would be good for the U.S. in some kind of sense, but also that would be hurting our trading partners with his across-the-board tariff. And those countries that are the closest to the U.S., like Canada and Mexico, have suffered. The Eurozone is thought to suffer from across-the-board tariffs, as is Japan, as is China. Of course, there's a lot of variables, like depend on how countries responded to a Trump administration. But the net effect of this has been for a stronger dollar, higher interest rates, and the stock market continues to roar ahead.
And what about if Trump doesn't win? It seems like that is now the contrarian take here. But what would happen then? Have you thought about gaming that whole possibility out?
Yeah, so I think that, partly what happened is the dollar has been correcting higher, and partly it has been since we had a relatively strong September jobs number in early October. We had some better than expected data. And so all these things have also played a role. But I do think that if we get a surprise, and that surprise would now be a Trump defeat, a Harris victory, I think the knee-jerk reaction would be to unwind some of this precautionary positioning, which then initially it looks like it could weigh on the dollar. To me, this is a big irony, because a couple months ago, people wanted to sell the dollar because Trump and his vice presidential nominee had been talking the dollar down. So a Trump victory, they said, well, this is bad for the dollar because they want a weaker dollar. But now it looks like, as the market's been positioning, a Trump-Vance victory has been greeted with dollar buying. Really paradoxical given their views. But it really tells you that out of all the things that move the foreign exchange market, the wishes of politicians tend not to be very high on that list.
Yeah, interesting how that works out. The Mexican peso was kind of seen as a proxy for Trump back in 2016 and in the intervening years as well. And this year now we have this DJT SPAC that's kind of like a better proxy. But you watch the currencies pretty closely, and has the Mexican peso also kind of mimicked what's been going on in the polls here in the U.S. and anticipating Trump victory?
I think so. To some extent, the peso has been offered. Latin America as a whole have been weaker, but emerging markets themselves have been heavier. It's hard to tease this out, but I do think that Mexico is interesting, particularly interesting because it is the U.S.'s largest trading partner. It had been a market favorite among the strongest currencies in recent years, but it fell out of favor earlier this year before we even began focusing on the U.S. election because of Mexico's domestic politics. And there they have a new president. Their president serves one 6-year term, and the new president is really a continuity candidate. She is AMLO's handpicked successor. She has a very strong majority in Congress, and that's what spooked investors, is the kind of constitutional reforms AMLO and her are beginning to implement seem to be weakening the guardrails that make investors more comfortable investing in Mexico, a developing country. And so I think that a combination then of domestic Mexican politics made it fall out of favor. And then what's going on in the U.S., higher interest rates, prospect of Trump. And, how Mexico has developed, how Mexico modernized was partly by the U.S. Free trade agreement with Canada and Mexico. Later, Trump renegotiated. But what it allowed to happen is continentally organized production. Think about the auto sector, the auto parts companies. And now what Trump is arguing is that locating production in Mexico is a threat to the United States. We want those jobs and those industries back into onshore. So it's not good enough to be nearshoring, as many people thought with the de-risking from China. It's not a question of nearshoring, but some parts of the U.S. political spectrum, including Trump and Vance, aren't happy with nearshoring. They want reshoring. And what we've learned, and we'll see this again on Friday when we get the U.S. jobs data, despite this effort of bringing back manufacturing to the U.S. is still losing manufacturing jobs. And that's really the thing. When you think about how things are made, right? We think about robotics. We think about this automated process. So even though we're producing goods and services, we're producing them without as much labor. And that's really we talk about deindustrialization, but it's a bit of a myth because industrialization, U.S. output is strong, but the labor to produce that output, I should say, it takes less labor to produce that same unit of output. And so that's the real challenge here, I think. But yeah, Mexico has suffered, and I think that Mexico is seen to be vulnerable. So the closer you are to the U.S. trade ties, the more vulnerable you are if there becomes barriers to trade and generalized barriers to trade, the kind that the Trump and Vance are talking about.
Mm-hmm. Now, it's an interesting thing politically because this is the reshoring and the onshoring. It's something that actually you would think a lot of Democrats would actually support, especially with strong union ties and such and domestic manufacturing. But I'm just thinking this through here. If the Republicans, if there's a sweep, we haven't talked about this yet, but if the Republicans take the Senate and the House, and is it then less likely that that any legislation he wants to do to improve onshoring will not make it, you think, or is that not something that is worth considering?
Yeah, no, I think that there's two parts to it really. One is there's some things that a president can do, and that's really what's happened lately in the past several years. Executive action to fill in a end run around Congress or fill in gaps in Congress's inability to do things. So I think that if it's all predicated on a lot of ifs. If a politician carries through with their promises, what they say in the campaign. But I think that generally we got to really distinguish between manufacturing output and manufacturing jobs. Right. So we could have more manufacturing in the U.S., but if the new auto plant and the new semiconductor fabrication plant doesn't have many humans working in it, but got robotics and automation, uh, we can bring back the output without bringing back jobs, and that's my concern. I think that's really what's happening to some extent. But Mexico is vulnerable, like other trading partners are in the face of a higher tariffs. I think
Yeah,
this is
yeah,
really the key crux of it.
yeah. And tariffs are something that you don't actually need congressional approval for, right? You can just, yeah, the commander in chief has power over those. So there you go. Oh, that's interesting. Okay, so all right. So now, but you don't think this would help U.S. manufacturing and the U.S. manufacturing sector and stocks, and there are some that are U.S. factory-esque and linked to that. Yeah.
Yeah, so I think when I think about the stocks that are carrying the stock market, the narrow breadth, I don't really see these kinds of companies. Companies that I mean, it's really the tech, right? We know about the Magnificent Seven, but broadly speaking, I'm not so sure that if we were to have, say that some of the labor-intensive production that left the U.S. that had gone to China previously, moved to Mexico, thinking about toys,
Mm.
footwear, thinking about fabrics, textiles, furniture, and I just don't think that this is going to be sufficient to really move the U.S. needle. So
Mm.
broadly speaking, I think that for a Trump victory, I think we should be looking for this tariffs, and then I think it becomes a question of not so much just what the U.S. does, but how other countries respond. So it's more like a game theory, like prisoner's dilemma, than just sort of a bull in a china shop, so to speak.
Yeah. Yeah. And I guess that then is the question is, and how the trading partners respond, not just China and Mexico and Canada, but the EU, right? And have you thought that through at all?
A little bit. I mean, of course, countries are already preparing for this. Uh, I'd say the interesting is really the U.S., Mexico, Canada, because there is a free trade agreement already in place. But we don't have a free trade agreement with, say, Japan or the EU for that matter. But I think what's interesting is the U.S., Canada, Mexico free trade agreement that is up for review, and it'll be reviewed beginning of next year, 2025, regardless of who the president is. And then the final aspect of it won't be until 2026. And it seems to me uh, uh, that yeah, just an interesting challenge here to have these to have these things go through amidst this protectionist sentiment underlying. And so I think that we should expect, regardless of who gets elected, more concessions from Mexico. The USMCA differed from the NAFTA partly because Trump negotiated greater domestic content rules. And what this means is it's not so easy for China just to export, say, cars to Mexico and Mexico would re-export them to the US. That might be a threat that some people see in the media, but that would violate the USMCA, which has, as I mentioned, these domestic content requirements. X percentage of a product has to be made in Mexico or the US or Canada to qualify. And but so I think we should be expecting that there's going to be tough negotiations, and rather than just try to examine it, I think that the Trump administration, the second Trump administration, would want to renegotiate the whole agreement.
Right. Okay. And all of which would end badly for Mexico, you think, or less advantageously than they are currently. Yeah.
Yes, less advantageous for Mexico, but also within the context that Mexico is Mexico's own political environment hasn't really been sort of conducive for foreign investors.
Mm-hmm. But it wasn't as bad as people. I mean, I remember when AMLO was elected, and even before he was elected. I mean, he was at one point the mayor of Mexico City, and there was a lot of he ran several times, I think, and
Yes.
actually contested one of the elections, if memory serves. And there was a lot of concern about him coming in. Then he came in and it was kind of business as usual. So, but you
Yeah,
do think that's, yeah.
I think what helped that was the belief that, and we've seen that the central bank jealously protects its independence,
Uh,
and so it wasn't swayed by having more doves. Say people who maybe AMLO thought were dovish and put on the central bank. It's been a very responsible central bank that's really got a lot of street cred, and so I think that's an important aspect that these constitutional reforms, some people think, will weaken those guardrails, like the making judges subject to elections, including the Supreme Court judges. And even though this, on one hand, this seems like a spread of democracy, on the other hand, people fear then that this would give politicians more sway over the judicial process. And I think that it's those guardrails that people think keep AMLO sort of on a narrower path. And if those guardrails weaken, investors need to be more careful.
Yeah. Okay. So it doesn't sound like Mexico is a very investable area right now, either for their bonds or their currency or their stocks.
Well, I think what's interesting though with Mexico is one of the things that AMLO tried to do, and Sheinbaum seems to be moving in the same direction, is tighten that relationship between Pemex, the state-owned oil company, and the government. And this could lead to an upgrade of Pemex if it's taken within the fold, if it's like a more secure relationship with the government. So I do think there might be some interesting opportunities in Mexico, but I do think the peso probably has not seen its low point yet.
Mm-hmm. Mm-hmm. Interesting. Although as an exporter, low peso would probably on some level will be good for certain parts of the Mexican economy. Yeah.
Right. But keep in mind when you think about the exporting of local currency, that most of Mexico's exports come to the U.S.
Right.
and they're mostly already invoiced in U.S. dollars.
Right. Yeah.
That's the problem, right? And just the role of the dollar globally. People, I mean, same thing with the BRICS. We just had this BRICS summit, and so people like jump up and down and they can trade more in their own currency. Of course they could, but there's a reason why they don't, and the reason they don't is because of the imbalances among themselves. And what's the country going to do with more Indian rupee or more Russian rubles? Is that really what you want? And it tends not to be, and so it really restricts the trade in those local currencies, which is why sort of like the dollar still acts, even though I know a lot of people talk about de-dollarization, but there's no real sign of it materializing in any substantive way.
Yeah. Yeah. I mean, that's one of the great things. I mean, one of the great myths is de-dollarization, and it may happen one day, but what's going to replace it? Not the Chinese yuan. Cryptos, good luck. They move 5% in one day. Good luck using that as a currency of exchange. Anyway.
Sick of me yet? Become a premium subscriber and avoid all ads or interruptions. Other benefits as well. Visit contrarian.supercast.tech for more information. We hope you're enjoying this episode of the Contrarian Investor Podcast, where we give voice to those who challenge a prevailing narrative in global financial markets. Consider becoming a premium subscriber. For $9 a month or less, premium subscribers receive a number of benefits. Podcasts are posted immediately after they're recorded. Transcripts are made available within 24 hours. Premium subscribers get direct access to the host, and of course, there are no ads or interruptions. Visit contrarian.supercast.tech for more information.
By the way, you don't need the .tech suffix to get to that website. .com will do the trick. And we also have a Substack where you can sign up for the same prices, same benefits, same details, contrarianpod.substack.com. So if you already have a Substack account and use it, or have the app and use that, that's probably the best way to go. So contrarian.supercast.com or contrarianpod.substack.com. Whole bunch of benefits, including, of course, getting this episode up to a week early without ads or annoying announcements. And you also get the daily Contrarian briefing and podcast that is released every market day morning at 7 a.m. This is a contrarian take on the events of the day ahead and what is likely to move markets, such as economic data releases, earnings, and other things. It is really good, and that is completely unbiased, of course. So check that out, contrarianpod.substack.com or contrarian.supercast.tech. Now on with the show. You mentioned the central bank's independence in Mexico. And one has to ask here, and one of the points of concern potentially of a Trump presidency is the Fed here in the US and how much he is going to lean on the Fed. And I mean, I believe it's within his power to replace Powell. I'm not sure when Powell's next term expires or what the deal is there. But he made some talk last time around about what the Fed should do, blah blah blah. I guess it's fine to just talk about it. But anyway, is that a concern there that the U.S. Fed may lose some of its independence with Trump?
I think that people are concerned about it on the margins. I mean, we've seen it's clear, it seems to me, that Trump and Vance have advocated greater executive control over monetary policy. I think this is mostly talk.
Mm-hmm.
I think that, of course, we saw this recently when the Federal Reserve cut by 50 basis points to start this easing cycle. A week or 2 weeks before that, we saw Trump warn against any cuts, thinking that they were politicized. And on the other hand, we had a letter from senators calling on the Federal Reserve to cut rates by 75 basis. And I think that there's no problem when everybody, right, like sort of America, everybody's entitled to an opinion. But whether the Federal Reserve listens to those other opinions or not, I think that's a different story. I think that the Federal Reserve cut 50 basis points, not to spite Trump and not to annoy those senators who wanted a 75 basis point cut. But I take Powell at face value that inflation had fallen, and if the Federal Reserve didn't cut, then the real interest rate. So just as sort of a naive understanding of it, right? It's just you take the current rate, you subtract inflation from it to get a real rate. It's not very rigorous. I think the way more robust approach would be is try to deduct inflation expectations, which are more difficult to measure than current inflation. But I think that's really the thrust of it. That if given how far inflation had fallen, monetary policy became more restrictive. And so the Federal Reserve had to cut just to preserve the level of restriction that it desired. And of course, the setting on monetary policy was done when the economy was in danger of overheating. It seems less danger of overheating now, even though we'll get the GDP number and it'll be another quarter in which the U.S. grows faster than trend, which is at the equilibrium pace, the level that the Fed says the economy can grow without being inflationary is about 1.7, 1.8%. And we're going to grow again another quarter of around 3% more or less. So I think the Federal Reserve did cut rates, but I don't think it's political. I really think that the Fed's, I think that despite all the talk that we hear about the Fed doing this or that because of the election or to appease who's in the White House, I really see the Fed as being primarily technocrats, immune to what's going on in the White House per se. Of course, fiscal policy is important, just the overall thrust of the U.S. economy. But I do think that the Federal Reserve, like the European Central Bank, is fairly immune from partisan politics.
Yeah, on speaking of partisan politics, have you thought through at all what may happen if next week's election is not decided right away? If there's contesting from either side, whoever the losing side is, I guess, and if there's, God forbid, another January 6th type of situation, maybe even on a larger scale, do any of these things concern you?
Not so much.
Mm-hmm.
I mean, of course, another January 6th is a bit daunting. But at the end of the day, I think that the U.S. still has a rule of law. There's the traditions, those guardrails that we talked about might be weakening in Mexico, I think are still strong in the United States. So I'm not so concerned about it. And again, think about the U.S. I'm under the impression that in 1960, Kennedy won on a squeaker, and that there was some talk that that Nixon could have appealed the election results. He could have challenged the election results, but he didn't.
Mm-hmm.
And the same thing with Gore and Bush. It went through the Supreme Court. The Supreme Court made its decision, and Gore conceded. So I don't think that this is a Republican-Democrat issue. I think this is a one-off issue by one particular candidate, and I'm not so sure that it'll be repeated again. But of course, we need to be careful of that. And it does make me think about how strong our democratic traditions are and how easily they can be, despite being around for a couple hundred years, how easily they can be wrecked.
Mm-hmm. Generally, though, going back to the economy, it sounds like you're pretty confident the U.S. economic growth can continue, at least for the short term.
Yeah, so I am worried about the economy because partly this has been such an unusual expansion. Just you think about with COVID, the stimulus, the unevenness of it, what's going on globally. So lot of moving parts that make this business cycle different. And some of these sort of tried and true uh, heuristic devices, like the yield curve. I never was a big believer in the inverted yield curve as being a
Hmm.
recession signal, but I am concerned that now no longer inverted, that becomes a more of a challenge for businesses.
Hmm.
But you take a look at leading economic indicators. We've been at recessionary levels, a 6-month annualized rate. Different sectors, especially the interest rate sensitive sectors like housing, have been hit pretty hard. So I am concerned that typically the U.S. does not have a recession in the fourth year of a presidential term. That's this year, the year of the election. No recession, but more likely the recession comes early on in the next president's term. And I know it's hard to see that now with the economy growing, having good momentum, but I think that in the back of our minds, many of us have some kind of linear view of the economy, that it grows slowly and then quickens up, or that slows down, and then contracts. And I think there's nonlinear elements. Sort of like just how they say on these investment things that the past performance is no indicator of future performance. Same thing with the economy. That when you look at how the economy, like what happens the quarter before the contraction, it's not like a big tell. It's not like a guy playing poker who's moving his wedding ring around his hand when he's got a strong hand. There's just not as there's just not tells like that for the economy, like slowing down, then contracts. So I do think this is a difficult business cycle. And I do think that the risks of a slowdown are still here, despite this 3% growth that we're likely to have seen in Q3.
Hmm. Any obvious winners of Trump election, and maybe assuming that the Republicans sweep?
Well, I mean, I think that the one area in which I think that a Republican sweep would have a dramatic impact, I think, is on mergers and acquisition.
Hmm.
Even 60 Minutes did a piece about the Biden's Federal Trade Commissioner and the cooling off effect it's had on some industries on M&A activity. Uh, one of the big memes so far this year has been talking about the overcapacity in China, the surplus production, and one way in which the U.S., Western Europe dealt with the same problem at an earlier stage in our development is mergers and acquisitions. How do you get rid of excess capacity? One way is through consolidation and concentration in industry, because that either take over and you rationalize the capacity, you let the inefficient producer go out of business, or as you buy up enough of it and you close down the inefficient parts of your own company to boost capacity utilization rates, boosting profitability. So that's my concern. One issue in which I can see a Trump administration being very different economic policy that many people might not have thought about, because the tariffs, of course, are all in the news. But I think the mergers and acquisitions, the concentration consolidation of U.S. industry would probably be accelerated in a second Trump term.
Mm. And you would think that might be good for companies like Google and Meta that are maybe in the crosshairs of antitrust regulators a little bit. So
Yep,
there's
for
one
sure.
area. Yeah. Interesting. I did not think about that. Yeah. Although ultimately, like a lot of the antitrust stuff is generally pretty toothless, isn't it? Regardless of who the president is. I mean, right?
Yeah, though, it's funny you say that because I too think that oftentimes it's toothless, but then I think about some big cases like how we could have the internet if AT&T hadn't been broken up. And so I do think that some of these large combines, this concentration consolidation of power, uh, does a disservice to future innovation and truly changes the dynamics of how the economy works. But yeah, I mean, I think that uh, the private equity space would also be helped by this kind of thing.
Yeah.
Uh, so yeah, I do think that there'd be more combinations. Whether it's really good for us as consumers or not is a different story. It has to be done on a case by case basis.
Hmm.
But I do think that further industry consolidation very likely in a Trump 2 administration.
Mm. Yeah. Gosh. Maybe on the banks too, as well. Thinking about that. Yeah.
Yeah, I think the bank's a little bit different just because banks are very large, and there's a maybe a desire not to have let the large banks grow organically, as opposed to uh, taking over other banks as a means of growth. But then again, when banks get into trouble, as we saw earlier this year, last year, the government tends to encourage some M&A activity in that
Yeah.
sector.
Yeah. I guess I wasn't thinking like JP and Citi or any of those. I was thinking more of the smaller ones.
Yeah, I think you're right that maybe I think ideally that would be happening is small, medium-sized regional banks uh, bulk up.
Yeah. Very cool. All right. Marc Chandler, thank you very much indeed for joining the Contrarian podcast today, last Monday in October. And in closing, maybe you can tell our listeners how they can find out more about you and about your various services.
Sure. So I'm fortunate. I've been able to find employers who allow me to post my commentary I write for them on the internet to make it freely available. And my website's called Marc to Market, marctomarket.com. That's Marc with a C. It really Marc to Market. Just I thought was a clever marketing device. I post something there 6 days a week. I'm also on Twitter. My handle there is Marc Making Sense. So that comes from the first book I wrote called Making Sense of the Dollar. I have another book out called Political Economy of Tomorrow, which really looks at the strategies in dealing with surplus production. I didn't really aim it for China. I was thinking more about at home. One of my protagonists is this guy named uh, 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 Charles Conant. And Charles Conant worked for the U.S. government back in the early 1900s. He also worked at the same bank I did a century later. And I give him credit for coming up with the Belt Road Initiative with American characteristics around 1900 for the same reason that Xi and China have developed their own Belt Road Initiative, create more markets, build up the infrastructure of emerging market countries, find new buyers of goods, find new markets for your inputs. Very interesting, but so that's political economy of tomorrow. And so, so I try to keep a high profile. I write occasionally in Barron's as well. Barron's essay every 6 weeks or 2 months or something like that.
Any other social media you're doing yet?
Just LinkedIn, Twitter, as far as I can go.
Are you doing another book?
I am writing another book. A tentative title is called The End of Economic Primacy. And what I'm doing, if my political economy of tomorrow was sort of like a retelling of that King Midas myth. Remember King Midas? Everything he touched turned to gold. It sounded good. It sounded like a lot of things my friends on Wall Street would like, until he tried to hug his daughter or drink some wine. And so really look at how we are dealing with our surplus. And this next book, this is my third book, The End of Economic Primacy, really takes a look at Abraham Maslow's hierarchy of needs. And I say that in high income societies like the United States, where most people have a roof over their head and good food in their stomach, and that's like under Maslow's hierarchy of needs, we should be thinking about other things now besides like economics, besides like getting more goods. And these other higher needs, I think, is where we're on the verge of moving in society as a whole.
Like in what sense? Not social media, because that's lower.
Oh no, but I think about like for Maslow, the highest part of his hierarchy was self-actualization. When people, I mean, you think about it, that for most of our careers, if you had a good economic argument, something was more profitable, more economically efficient, generated a better risk-adjusted return, there'd be very powerful arguments for that. But I think that recently, but I think it's increasing, that other interests have arisen that are maybe more important. Maybe the environment, climate change, maybe social justice, maybe national security. All these things are really rivaling just because something's profitable. And it might be more profitable to buy EVs from China, but maybe that would undermine our own auto sector, which besides producing autos, produces tanks. And so so I think that, just the argument really is just a broader appeal of now that we have food in our stomach and good roofs over our head, what's our next set of needs and wants?
That is very interesting. I look forward to reading that and to having you on the show as part of your book tour when it comes out. What's a pending release date? Do you have one?
I'm thinking late next year, early
Cool.
2026.
Very good. Awesome. Well, I'm looking forward to that. Looking forward to keeping in touch. And you can all follow Marc in the ways mentioned. Thanks again for coming on the podcast today. Thank you all for listening. We will be back here again next week, maybe even before, because I have another guest coming up to discuss the election. and the third in our series. So stay tuned for that. And that is all. Thank you. Goodbye.
Thank you. Good luck to everybody.
Thank you for listening to the Contrarian Investor Podcast. We hope you enjoyed this episode. To subscribe to this podcast, simply open your favorite podcast software and search for Contrarian Investor. Follow us on social media by searching for Contrarian Investor on Twitter and Instagram. Send us your thoughts on feedback@contrarianpod.com. We look forward to speaking to you again next time.